What's going on, guys? Welcome back to another video on the channel. Today, I want to review an SPX swing trade that I held from yesterday into today. It was about a 500% win. I want to share with you the technical reasons why I took this trade. We're going to focus on the technicals in this video because there were some very clear technical reasons as to why I held onto this position. After talking about the trade, I also want to cover some of the pros and the very large cons of trading the SPX. This is not something that I would recommend to newer traders, so I want to make that very clear. These contracts are extremely volatile. They're extremely dangerous. They are not something that I would get very involved in. But the reason I took it is because this was the best risk to reward that I could have on a trade like I did here on the SPX. I will review all of it in today's video. I hope you guys do enjoy it. Press that like button, subscribe to the channel. Let's go ahead and get started. So guys, before we jump into the technicals, I'm just going to go ahead and pop up the entries and exits for my SPX puts so that you guys can see where I entered, where I exit, and we can now go over the technicals, get a little bit more in depth. So my analysis for this trade started on the 4-hour and also on the hourly chart. This is where I really like to do my analysis for swing trades. I really don't like to get too much smaller than the hourly chart because when I take a swing trade, it is based off larger time frames. It is based off a larger move. And if you're really diving into the 5-minute, the 1-minute for swing trades, it's a lot of noise and I would not recommend it. 4-hour, 1-hour, and sometimes the daily chart is definitely where I start to do my analysis on something that I think I want to hold overnight. So here you guys can see this is the 4-hour chart on the S&P 500 futures. And you can see over the last few days, we have seen some nice downside. On your screen, you're going to be looking at two different lines. The first line is the green line. That is the daily 100 SMA. And the yellow line is the 50, is the daily SMA, the 50 daily SMA. So you guys can see these lines are on the screen. So now that you know the SMAs that are on your screen, the 100 SMA was one of the key reasons why I took this position. So let's go ahead and break down some of the technicals here and what I was watching. On Friday, we made a very big downside move, and I figured there would be some continuation to that move. After a big move like that, there is always some type of continuation, in my opinion, and we saw yesterday on Monday, it was a really slow, sort of slow volume creep to the upside. I didn't believe it really whatsoever. I figured that we were just trying to creep up to the upside, potentially find a rejection point, maybe some shorts are covering, and after seeing the end of day price action, I saw something that started to form, and that was a very clean bear flag. So what you guys are going to see right here is that we had a previous support level around this 4080 level on the S&P 500. You guys can see we bounced here, and when I see a double bottom like that, I am definitely going to put a little bit of a level there, and I'm going to draw a little zone, right? I want to know that if we come back to that area, I want to know that this is a previous support that could turn into a rejection point, right? If we are trading below a previous support, if we move back into it, that is turning into a rejection point. So you guys can see we had this double bottom back here. This is back on the 1st of August, right around here. And we had another bounce right here around that 4080 level. And I was looking to see, is the S&P going to try to trade back into that previous support, turn it into a rejection, and sort of create a bear flag here? So you guys can see we traded back into that 4080 level. We didn't touch it exactly, but we got very close to it, and we started to see those rejections come in. Now, this is my classic break and retest. You guys know I talk about this all the time. This is a break of a key level. This is a retest of a key level. And now it is going ahead, retesting it and coming back down, right? This is a classic break, retest, rejection, right? That is exactly what I talk about all of the time on this channel. So you can see the break, you see the retest, previous support into a rejection, and I started to realize that around midday yesterday. What you also will see is if I go into this hourly chart, you will see that yesterday we were trading into the 100 SMA. You can see here midday, late day, we were trading into the 100. We were rejecting it. You can see this morning we traded into the 100 SMA on the daily chart, and we rejected it once again. So that 100 SMA was definitely influential for me to go ahead and take this position because I had both a 4080 rejection point right above and I had the 100 SMA. Those are two confluences that I really liked and why I had some conviction in trying to trade this downside. What you'll also notice on this hourly chart is we just created a very clean bear flag. Here you go. Here's your little slow creep to the upside. Low volume yesterday to the upside into the 100 SMA, into that previous rejection point. My stop loss on this trade would be right over that rejection point, And you can see today we had a very nice bear flag breakdown. So now I want to go ahead and pop up on the screen the exact Discord message that I sent to the group when I got into these SPX puts. You're going to see the 100 SMA rejection was definitely an important level that I was watching for a rejection point, and you're going to see the contract that I took. You'll see in my message from the group that I was very small in this position. I took about a 1% trade. This was about 1% of my overall portfolio because the SPX is a monster. These contracts could have went to zero if we moved higher. And by open today, which you can see in my live trade from this morning on Instagram, I was down about $1,000 to start the morning. So just overnight, I was losing money on this position because we had a little bit of an upside on the pre-market move and the theta decay of a 0 DTE contract. Obviously, it's not the best type of position to get into. But for me, with $550, which is about a 1% position for my portfolio, that was a total risk that I was willing to take. So I have basically a limited loss of $500, which is something I was comfortable with. And knowing how aggressive these SPX contracts are, I knew that I could get a very large percentage point gain if my thesis was correct. So there is no reason to be putting a large amount in these types of positions because I know I can get 200, 300, 400, 500% on a trade like this if my thesis is correct. In this particular scenario, we got about 500%, which is about a $2,500 gain on one contract, and I had two contracts, so it was about a $5,000 total gain on this trade. So I want to go over this analysis just one more time. If I go to the 4-hour chart, you guys can see we had that downside. We had a previous double bottom low. This was a low that I was watching. We broke below it on Friday. If we break below a very important previous support, my next automatic thing that I'm looking for is, do we trade back into it? Do we retest that level? This is the break and retest that I talk about all of the time. You guys can see yesterday on Monday, we traded back into that level. We retested it. We came back into that previous double bottom, turning it into a rejection point. And we had the 100 SMA that caused a reaction as well to the downside. Bear flag. This was something I talked about in my pre-market live stream this morning. If you guys were there, you heard it live. We were sort of watching this bear flag start to set up off the 100 SMA. Nice downside. I was scaling out as we started to get the move to the downside. You guys saw in the beginning of my video my entries and exits on this position. So for this particular trade, I had a defined risk. I had $550 per contract in this position, so I knew my risk. I was willing for this to go to zero. I knew that if I'm swinging a 0 DTE contract, if I'm swinging a 1 DTE contract into the next day where it will expire the following day, I knew that there was a total possibility of this contract going to zero. That is why I took a $550 position, $550 risk per contract, because I knew that I had to have that defined risk. I didn't want to put too much of my portfolio in a trade like this. There is always opportunity for me to be wrong in this position. And with SPX, with same day expiration, it is very volatile. It is very dangerous. There is absolutely no reason why someone should be putting large percents of their portfolio in SPX contracts. They are very volatile, very dangerous, and I want to get that point across very clear because there's people that can make a lot of money trading SPX and give it all back the next day. There's people that can blow up their accounts in 10 minutes on the SPX. Not recommended to newer traders with a type of trade that you have defined risk where you're taking a small percent of your portfolio. If you're looking for a setup to work out like we had here on the S&P 500 trade, then I think it's a little bit more acceptable. Defined risk, keep it small, look for a technical setup that you're trading. In this case, it was the bear flag, the rejection off the 100 SMA, and that is why I took this position. So overall, guys, I hope this analysis makes sense. After watching it, you guys can see the 100 SMA was definitely influential in my decision making. Make sure to have that 100 SMA on your chart. Make sure to have the daily SMA on your chart. I'm going to show you guys real quick. If I go to SMA, simple moving average, and I put that on and I make it 100, this is what most people will do. They'll put the 100 SMA on their charts. I'm going to make this blue, and you guys can see that when I apply this, this is in a very different situation, a very different place than where the actual daily SMA is. So you can see this is the 100 SMA, but this is not the daily 100 SMA. This is the 100 SMA on the 1 hour chart. If you want to be looking at the 100 SMA on the daily chart across any time frame, you have to make sure to be using that daily SMA study in TOS. That's the first thing that came into this analysis. Second is just basic price action. Break and retest, previous support into resistance. Very simple, very rudimentary. You can see downside, break, retest into these previous support levels, and you can see the rejection that came in. Third, the confluences, both the 100 SMA and that break and retest level, making me have some confidence in this position. And last but not least, how you set this trade up, defined risk, SPX contracts. Make sure to put in probably less than 1 to 2% of your portfolio. These contracts can go to zero very quickly. Please do not put large size in SPX contracts, especially if you're going to be swinging them overnight. So guys, I hope that you enjoyed today's video. I hope you found some education from it, from the technical analysis, not only the technical analysis, but how I structured the trade. SPX contracts, small amount of my portfolio, positioning myself for zero, right? Positioning myself in this position that if it went to zero, it would be fine. It would be a small loss, and I would move on and understand why this went wrong. In this situation, it moved very nicely in my favor, and we had a very nice percentage point win. Small amount, but a very large percentage point win. That is what we love to see. Percentage points are the most important, and getting 500% on a trade like this was definitely a great trade and something I can walk away happy from, no matter how big the monetary gain is or how much I put in the position. Hope you guys enjoyed today's video. If you did, press that like button, subscribe to the channel. If you want to trade live with me every day, make sure to check out the Discord down below. It says trade live with me. If you want to get technical analysis on a daily basis in the pre-market, make sure to come hang out in our pre-market live stream starting every day at 8 a.m. Thank you guys for watching, and I hope to see you in the next one. Peace.